History tells us that markets experience incredible volatility moving forward. So what happens for the next 2 to 3 months? Hello, ladies and gentlemen, and welcome back to the Daily Show, where we discuss stocks, commodities, and cryptos. We'll be taking a look at a deeper dive into the NASDAQ rebalance that just happened. What does it mean for these huge volumes that we've had traded through? Could they be secret Wall Street trades that mean something a little bit more sinister? And also, is earnings season so far making out to be everything that we'd hoped for? Well, according to the beats and misses, we're starting to see a little bit more misses. 18% only of the S&P 500 companies report, but with 40% this week, we might get a little bit of an idea on this. Such an important level. So let's now together take a look at some of the most important charts and news events for the week ahead. Well, welcome back everyone to the Daily Show, where we discuss macro, lead indicators, and of course the hottest charts. If it's your first time here, welcome to the community. Subscribe, smash that like button, and we've got a lot to cover in today's video. Let's begin by the Monday and take a look at what happened in rotation. Well, it was a mixture of energy, banks, and actually sectors that usually are moving up with a new bull market. We talked about how these are the next sectors to go, and after this, there's some other sectors that do traditionally actually run. We'll be talking about that later on, but will we get our pullback that happens usually in Q3? Well, the VIX tends to rise at this time of year. In fact, we've had a VIX that's done pretty much the same thing for many years now running. February tends to get a big VIX spike, and then we get the bigger ones in August and September. This is data going back all the way to the 1990s. If we look at earnings season for this week, there's little wonder why we tend to see a spike. These are the big earnings reports that often disappoint. Microsoft and Alphabet in less than 24 hours, along with Snap. We'll deep dive into those charts later on in today's video. But this week's all about volatility and, more importantly, huge market cap sentiment, because of course this is around 40% of the S&P 500 that will be reporting. After a sustained period of kind of weakness here in sentiment surveys, we've now seen one of the most bullish periods on record. Does this mean that everything's turning? Well, historically, yes, it's been pretty bullish, but notice that the bears in the recent survey were only 21.5%. If Wall Street wants to pull the rug, this is the time to do it. And you can see here on the bull/bear spread, we've now hit a new high over the last couple of years. We've also seen this bull ratio show us that, generally speaking, yes, things look pretty good about a year later, but over the next 1 to 3 months, in the slot that we're talking about, the next 2 to 3 months being potentially weak, the markets don't tend to report or earn as well as they usually would over normal periods. What's one of the charts that we're looking at most closely for this? Well, it has to be bullish percent index. We're waiting for this thing to go back underneath 70, and it just hasn't done so yet. But I will report on it when we get that reading, and of course we see that information. What about seasonal trends? We know that in pre-election years, taken over 25 years of pre-election, so we get 7 reads. We tend to see this sell-off really pretty much around here at the time of the recording, and it generally is led by earnings results and something else that usually is happening to do with central banks. If we look at NASDAQ first half being greater than 20%, it's consistent with these reads in Q3, and we've discussed this quite a lot on the channel. But it's not all bad. There's always opportunity in markets. Even if the big tech stocks sell off, that provides great opportunity for potentially buyers to buy the dip. Also, we've got things like gold that's seen flows into it that we reported over on our Twitter. Follow at FX Evolution if you're interested. Some massive flows coming back into the big shiny metal. Will that continue? Well, we'll talk about it again later on the video, but I'm very excited for gold over the next month or two. Let's also move over to what's going on with the options market and these earnings. It's important to note that we've got these reports, but how much volatility could there be for you out there if you're trading these stocks? Some of these are above average. Meta is sitting around 9 to 10% expected moves. Snap over the next 24 hours, same with Spot, have 10 to even upward 12% expected moves. And Google and Microsoft are sitting on 6% expected moves. If they report with bad forward guidance, you can really see what's going to happen to the market. And this is where it becomes so apparent why this week's so important. By the end of this week, approximately we'll have around 40 to 48% of the entire index, the S&P 500, reported. By August 7th, we will have done 80%. So there's a lot going on this week, and it's a very important one for us to be paying attention to. Let's jump over to the wonderful world of options and take a look at what's been going on with unusual trading activity. We don't have too many volume trades that have gone through over the last 24 hours after that massive flurry of Wall Street monster trades into the rebalance. But let's have a look at the options in the last 24 hours. The big thing has really been here, I think, AMC. We saw no to the vote of dilution of the shares. That sent it up, skyrocketing 33% in pre-market action. Didn't really do anything from that point. It opened up around there, and we saw a monstrous amount of call and put volume, 4.78 times the standard 90-day average. We also saw some nice bank moves here with strong bank plays, 2% plus on JP Morgan and Bank of America, with some unusual options activity, again striking out monstrous amounts of calls there in that market. Nothing much else was, I think, really huge on the session, though we did see, some moves, of course, in Johnson & Johnson, healthcare, those types of things continued to kind of be relatively strong following off from last week. Amazon continued to weaken as well, which is, I think, one of the worst looking charts in the market that we'll take a look at later. What about rotation? Did we see defensives play again? Well, the last 5 days rotation, you can see utilities, healthcare, and staples all being in the top 10. This hasn't happened pretty much for months and months and months, where we saw 2 days of rotation to 3 days of rotation. We haven't had that since realistically around February of this year. And what does that mean for the markets? Well, it does mean that potentially we just saw Wall Street go defensive, and we just don't know it yet because, of course, we don't have the earnings results. If that's true and earnings results disappoint on Microsoft and Google, especially Google with advertising revenue dropping, which we already suspect is occurring, that's going to mean a potential movement down to mean reversion, which is the 20 moving average on the charts. So speaking of charts, let's jump into them. Let's have a look at the VIX here. The VVIX and the VIX. The volatility is expected to spike. As we spoke about, the thing with the VIX is that we usually get a huge amount of volatility coming through over the next 2 to 3 months. Have we seen it yet? No. Did we see it back in February? Well, of course we did, because if we scroll back over here, you can see that February into March spike that we tend to get. Big spike off on the VIX, went to 30. Now, if you go back through history and you have a look at some other periods of time, August into September, of course, of 22, and then we scroll through here and we have a look whether we got one in Feb. We got one in Feb of 22 as well, and you can see that it's kind of a consistent thing. So here's the September spike, August, September spike. If we go back over to the February result over here, you can see February of 21, we get that spike in the VIX. So although there are other spikes, these are the more consistent ones historically, and something we will be looking at. So I think that VVIX should be put on our charts, and VVIX is the volatility of the VIX, and we're looking for this underlying internal to actually spike up, showing us that volatility is just around the corner. I wouldn't be surprised at all if we get any kind of bad result or anything that's less than expectation coming out. And the expectations aren't that high, I think, for some of these tech stocks at the moment, according to the economists. Then if this starts to spike, expect the VIX to potentially explode over the next 1 to 2 months. US 2-year will also need to be watched if we do have some underlying weird internals. The Fed is, of course, expected to do 25 basis points. If they come out and say something wild, like they're going to do another 50 basis points or something like that in terms of hikes, expect the US 2-year to break through 5.1. That will be a big bear sign. So as we've mentioned, this is one of the most important charts for us to be watching. Magma did nothing. We do know that this will be a chart we watch over the next 24 hours. It's pretty important that we have the patience here to react to the news. Predicting the news announcements from Microsoft and Google and others, it's okay, but you just need to know that the risks are there. 6% average move. It could be 10%. So if you're not willing to adhere to those risks, remember, earnings season often better traded straight after the fact, once you have the information on hand and you can then present the technical analysis. So for an example here, we have kind of like a switch of trend. Maybe if it comes up quickly, but the result is not that good, and you can see that after, then maybe there's a sell here. Conversely, if the market floors itself into 1038, we know there's been some defended buying there. Maybe that's a buy opportunity. Being reactionary is often much better than prediction. Prediction gets us into a lot of trouble. Let's move over to copper over here. You can see the tweezer rejection, though no new low. If we did get a new low, I would have expected us to move to 3.7. So copper not showing further signs of demand destruction at this point, and energy also was quite strong over the last 24 hours. The skew index is doing nothing. We got it crushed a little bit last week. We're looking for this to crush further and of course show us that maybe the bears are in control under the hood, but we'll be watching it in more detail then. And we have a bright red movement between, of course, central bank liquidity and the Qs. And central bank liquidity continues to drop or hover as the Qs continue to drive higher and really only show some weakness. This is the most disconnected we've seen it in about 2 years, so we'll be paying a lot of attention. Let's jump over now to single stocks and take a look through the market along with some commodities, and then we'll get into indices later on what's going on ahead of this earnings. Now, Google looks pretty bad. Frankly, it's got like a nice kind of switch of trend, a retest back up here, an island reversal, which it had two actually, one to the bull side, one to the bear side, and it keeps failing to hold any rally. You can see here it rallied in the session and then kind of like fell back down below, creating a red candle, although it was up 1.3% on the day. The earnings result's going to be very important for this. If it breaks to a new high, you'll move to the next level of equilibrium in most cases. Now, where is that? Well, we're probably suspecting it's somewhere around 141. So there's a decent move that could be here if earnings are good. But if earnings are bad and forward guidance goes bad, I think it's going to around 105.50. And that will be the next move for Google. In both cases, you don't have to trade to those levels, but what you can know is when it hits those levels, there might be opportunity for you as well. Remember, we come from an abundance mindset. It doesn't matter if you miss an opportunity, there's always going to be a new one. Don't chase, it's never a good thing. Just make sure you're always taking replicable trades like a business plan. That's the main thing you want to be doing. Let's take a look at Snap. Snap, of course, formed base, broke out on a weekly, and now comes into earnings. Is it a false break? Is it real? We'll find out in less than 24 hours. Microsoft, my favorite stock in the market. Terrible looking candle. Obviously, if you do end up getting a close above this candle though, it could be significant for massive squeezes to go. And I would say at that point, considering how many stocks did this in tech, we're probably looking at all-time highs if we get past these levels next time. This looks pretty bad. Will we get follow through and sell off 322 where the bulls sit? And if we get underneath there, then we could be looking at a sustained sell back down into the 280s, which is probably where we're going to get into something like a mean reversion style trade. Now, that marks a decent amount of percentage off. It would be around 17%. That would be consistent with mean reversion, which is the return back to the 20 moving average on a lot of these stocks. They often say that AMD leads the charge. It did back in 2021. We weakened in November. We further weakened, of course, in December. And then January, well, we know what happened. This looks kind of similar. If I was showing anyone this chart, they would all say, we need to get above here. And once we do, of course, we can go to the moon. But at this point, ahead of earnings, ahead of everything we know, which earnings are only 8 days away for this stock, this looks pretty bad. And that's because we have these two rejection wicks. And if we get a new low, we're probably moving through to somewhere around 90s, 88 kind of area. We got asked this on our stream, which we do every Monday for the public community. So if you guys want to come and hang out, we can do that. And we took a look at more in-depth AMD. So check that one out. It's on our channel. Subscribe. Click on the Monday stream. We looked at AMD in more detail. What about the dollar index? Well, it hit target 1. Congratulations. If you've been bullish dollar the last couple of days, we obviously switched down in here and we suspected this would occur. And yeah, it's moved to a nice level. I still think there might be a little bit more in it. 101.65 is currently a zone I'm looking at for the dollar. And it's been going kind of strong the last couple of days. We do like gold at this point. It's fallen back to the first area of where bulls are going to be present. If it keeps falling, we suspect it's going to around 1938, 1940. But at this point, if we go to the 2 hour, you might notice that we don't have a change of trend just yet, but we have found some buyers. I would say up here around 1968 would be a pretty critical level to breach back through. And there's still some problems, but from a day trade perspective, you're kind of looking for something like that. Gold is currently turned to the bullish side. We saw big money flows come in. We reported on this channel, and that's a fairly big deal. Tesla, yes, okay, we've seen some sell-off here. We ended up getting a resurgence back on Tesla, 3.48% up after opening week. It's very hard to read this chart. The trend on some time frames has switched now towards the downside. Daily level down here at 240, that's going to be an important turn for swing traders. But a lot of people will be trying to short this stock, and this could just be a relief rally. So you're getting kind of like a relief rally into this. 300 is a pivotal area. If we snap that in the future, momentum traders will push it back up. But in here, it's like question mark, very hard to tell. We saw huge trade volumes go on here, and then it kind of pushed one day higher and then sold off. If you're a Tesla bull and you're an investor, I don't know if you probably care, but as a trader, you're looking very closely at the next moves here. Semiconductors still remain weak, though no follow through on the short action. Island reversal up here, guys. So at the all-time highs, we get an island reversal. We've got to be paying attention to this chart, probably the most important in terms of the main sectors at the moment. The ASX 200, for all the Australians out there, as we enter into indices, remains at supply. There's no change. It just sits there at the resistance. The German market, now that's weird. It keeps rejecting. We get 2 rejections over here. Then we get like a couple of bull days. Historically, when you see these types of things, you actually do still take the high. I don't know if that's going to happen. It should have already started selling if it was going to. Though, we still remain at this point, cautiously bearish with, of course, our overall thought process on this being a Wyckoff distribution. And this was the area that we were targeting towards that sell. So the market's clearly coiling. I don't know which way it moves next. We just don't know that yet. If you wanted to wait for further confirmation, 16,000 is a big deal, and 16,107, a break underneath that should really show the bears are in control of this market. US 2000, the Russell 2000 small caps hit almost 2,000, then sold off. It's waiting for news. You can clearly tell it doesn't know what it wants to do. It's at resistance. The Dow doesn't care. The Dow's at these highs, but big breakout there on the Dow. Looks pretty strong, big volumes, etc. going through. The Nasdaq's done its rebalancing. I guess at this point, we probably should have a look at that rebalancing, which we have over here. So we'll get that up for you now. 1 second. Here it is. And basically the rebalancing just shows you there are a couple of moves. There was some forced flow impacts, obviously, into Apple, Microsoft, Alphabet, Amazon, Nvidia, Meta, Tesla, etc. All of these stocks, by the way, pretty much down to here, presented some of the largest trades that we've seen in a long time. Now, the rebalance is a fairly big event. Obviously, there's got to be a big billions of dollars of sellout, but there was huge block trades. The problem I've got with it is, why did it happen at this point? Okay, yes, we had overweight markets and they clearly wanted to do it, but it just seems all too well timed. So we have a lot of heavy selling that went into the market, or at least heavy trading that went into the market. We can assume it sells, and it's all happening at this period that could be a weakness into the earnings events. I don't know if you want to be a conspiracist, but certainly it's it's happening at the right time for the market to show the weakness if it wants to. S&P 500 will move over here. We do have that island reversal at the highs. You can see the gap up and the gap down. So again, one of the weaker signals that we've seen in a while. We've had it before, which is over here, and it only sold off for like a day or something, rallied, sold again, no new low. So we're waiting for further selling to go underneath 45.28, and that comes to the same point as the futures. I'm actually liking this chart at the moment. I think it's been doing some good things. This was an excellent short opportunity in the supply. We talked about on our live stream how the bears would sit here in the last 24 hours. We kind of expected the market to come to this point, though I would have liked to have seen bears actually commit a bit more. They barely committed to the short after hitting this critical zone. The stop losses above this will have been taken now due to this candle. So sorry if that happened to you, but yeah, you should always have a bit more protection than that. And then we're looking for new lows to be formed. So really for the bears, the proper swing bears are going to be underneath 4,500. At this stage, it's just all bull, all good. For the bears that are looking at day trades, they're kind of thinking, well, what about this level? Can it actually, sell off? And then targets would be like 4,520, 4,500. So some big critical zones here for markets. Again, the reason why you're looking at this is because when you go over to some of the time frames, you can see these big rejection candles. Now, this daily close was unable to get above the wick, and I think that's important. If we take a look at the weekly, it rejected underneath previous closes, which at this stage, unless this weekly closes up, because that'll change things, and we're probably going to 46.50, if not even higher at that point. Here, right now, the bears do show some signs of potential opportunity. And it really comes down to the reaction after the big earnings results. So we'll be watching that very closely. Google and Microsoft will bring them back in the next 24 hours. Another one I want to mention was Amazon. It actually hit our second target. We liked this one a while ago. Consumer discretionary doing very well. They moved back their earnings results, so now it's 10 days away into August. And over here, we get a monster hit. This is a very good resistance level. When we scroll into the 2 hour, again, it looks like it's kind of double topped. We're back into the trade range, back into this could be accumulation, could be distribution event. It's very, very tough until we see a little bit more evidence coming through from earnings to really know what direction this is in. Bitcoin does look weak. I mean, this thing actually sold off. It closed below 29,500. It looks like it's going towards 28K-ish, which is the next level where buyers will be committed. If it does end up buying here and then we snap back above 30,421 though, expect a big squeeze. I'm interested in Bitcoin, super excited for this chart. I think it's going to be really, really cool. News ahead, everybody. There's quite a lot. So as we scroll through here, we get a whole bunch of other central bank information. Tuesday, we see CPI coming out here for Australia, which will show us a bit about inflation around the world. Then we get the FOMC statement, press conference, rate hike, 25 basis points. And then we go into more ECB press conferences, Bank of Japan monetary statements, and of course, core PCE price index at 8:30 a.m. New York time on Friday. Thanks so much for watching, everyone. It's going to be a big week. Look forward to tomorrow. I'm really excited to go through Google and Amazon, or Google and Microsoft, and to have a look at the reaction of the market, at least initially. Will the bears gain control, which they haven't been able to do now for quite a few months, or are the bulls just going to keep squeezing this thing higher? I think we've got our key levels, and more importantly, we're ready for the action. Thanks so much. Bye for now.